Welcome back to another YouTube video, and today we will be discussing the only strategy you will ever need to kill Volatility 75 1S. The only strategy, 90% accurate. Okay, that's just a clickbait. I haven't tested the accuracy of it, but let's get into it. So first things first, we're gonna go to what? Derivative trading view, right? And then we're gonna come in derivative trading view. We're gonna have the charts and everything. You click here. You see here's your forex, your stock indexes, your commodities, cryptocurrencies, derived. We're looking at derived, and that is V75 1S. That's what we're looking for. So in order to properly execute the strategy, we need to be on the 15 minutes time frame, right? It's a very easy strategy. We're going to be looking for one key component, and that is a consolidation. But what is that? So the market is comprised by three things, right? Three different types of market conditions. We have a trending market, the downtrend counterparts. Let's make that look nice, because now I'm just going too fast. We have a ranging market. We have a choppy market. So we have an uptrend. An uptrend is categorized by a series of higher highs and higher lows, while a downtrend is categorized by a series of lower highs and lower lows, and it can be joined by the tool of a trend line. You can use a trend line to join the uptrend and downtrend, but that's not really important at the moment. What is very important, what is key in understanding this video is what a range. What is a range? It's consolidation. Basically a point in which price fails to break above or below. It does not want to go up, it does not want to down. There is a support and the resistance. It doesn't want to break either part. It doesn't want to break the resistance, it doesn't want to break the support, right? Okay. Then we have a choppy market. When you have a choppy market, we don't trade. What's a choppy market? Choppy market is when you have what? You have somewhat of an uptrend, somewhat of a downtrend, somewhat of a range, and all of the above. It just does not make sense, right? Okay. So sharp. Now we want to execute the strategy. What do? We're gonna jump into the 15-minute candles time frame and look for what? A range, right? We're going to look for a consolidation. So we're gonna take you through. I'm just gonna take you through a few trades that I've taken throughout the past few trades that I've taken. Right? Let's come here. So when we come here, first things first. What you notice is that we have a setup that was made, and we had consolidation over here, and boom, played out quite well. I will explain I'll explain the whole trade as we come into that. Is the profits nice? We have, okay, these are the same things, not me like in my own picture and post. We have this, we just broken out. We're not trading a strategy here, but boom, straight through. Okay, these are just profits. We had the same thing, consolidation, and then we broke to the downside, boom, straight to TP. Consolidation, broke to the upside, boom, straight to TP. And here we wanted to go down, and boom, straight to TP. There was that consolidation. And then now let us look at the types of trades we're looking at, right? Okay, so if we come, I'll just go and recap some of the trades we took. So if you come here, right, this is me not explaining it yet, just making examples. So we see that, okay, price was coming down, and then it gave us this consolidation, and then boom, broke to the downside. gave us somewhat of a consolidation. It went up, consolidation up, consolidation up. But with all that being done, they created this major consolidation. Boom, all the way down. Created this over here. And although we will be looking to sell as soon as we broke down, we actually could have gotten liquidated here and then continued down, but as you can see, we kept on having those type of trades playing out. We kept on having those continuation patterns playing out. We kept on having consolidations playing out. Kept on continuing down, lower and lower and lower. We broke down. We had that, boom, broke down. We had that, broke that. Oh, excuse me, we had that, down, over and over and over and over. So basically, let me throw out the setups that we're looking for, the types of setups. We are looking for setups that basically have something like this that plays out. We need to see something like this. This is the strategy that we're looking at. So first things first, we need to identify an area of obvious momentum. What do I mean by obvious momentum? We need an area that has a lot of momentum, high, like big candlesticks, big amounts of candlesticks that are acting up together, and it's moving quite fast with a high volatility. So when we identify that, we see boom. And then after that momentum, we need to see a short-term weakness. We need to see a consolidation, a pullback, or a correction. Consolidation, pullback, correction, either way. And it could be this, could be a rectangle. Then once we have that, the setup is nearly complete. What do we need to see? We need to see the low being taken out towards the downside, or the high being taken out towards the upside. And with that, we can have 2 points of entry. Yeah. So what did I say? Number 4. Number 1. An impulse. High volatility. Point of high volatility. Right? Sharp. And then number 2, we need to see an obvious pullback. We need to see a pullback. Wording consolidation or correction, right? And number 3, we fly. Let's just say we fly. Simple. It's easy, right? Easy. That's all you need. That's all you need. And you will flip $1 into $100 any day. You will flip $1 to $100 any day. That's all you need. 1, 2, 3. Where do we take our entries? At the break. So let's now say we've zoomed in to this point over here. We have our correction over there. So when we break, we're gonna have either 1, breakout retest and continue, or 2, a clean break. Right? So when I say we have 2 points of entries, let me show you what I mean. So, at the first break, at the first break over here is entry number 1, and then if it continues up, boom, profits, and when it reverses, if it doesn't reverse, giving us a retest, then we have entry number 2, and then boom to the upside. Then if we have a clean break, it will just be one entry moves and then boom to the upside. You get me? So where would we be looking to take our stop loss? So if it's just an initial break, we can have a stop loss maybe around here, but that's a 1-to-1. We don't like 1-to-1s. We can have a stop loss around here. Let it breathe, but also don't trade like you're a billionaire. And the same thing here. You can either put it down here or let it breathe here. Don't trade like you're a billionaire. What I mean by don't trade like a billionaire, we're not looking for these type of trades. That's bullshit. That is bullshit. Because if it reverses, you're losing the same amount of money you'll be making. That's not a logical risk. You get me? Or alternatively, you're gonna fund $1, and this entry over here, you're either blowing that $1 or making $20. Win-win situation. You get me? Okay. So now I gave you the blueprint, I gave you the entry criteria, I gave you what you look for. Let's look for it in the markets. Okay, what happens if it's going down? Because this is us going down, this is us looking for buys. What happens if we're looking for sells? So you're gonna take all of this that I drew here, flip it upside down, same thing, same criteria, same setup, flip it over. I hope I'm making sense of the explanation. Now we're gonna look for it in the live market. So first things first, what did we say we're looking for? Obvious momentum. We're looking for point of high volatility. Where's that point of high volatility? Boom. That's number 1. That's number 1. And then correction. Number 2. That's number 2. And then let it fly. What did it do? It flew. How long did it fly? How long did it fly? Where's my measurement thing? It came from here to around here. This entry went for 5 hours and 30 minutes. 5 hours and 30 minutes. Boom, in and out. Clean day trade this one. Clean. Just like that. 5-hour trade in and out. I say in and out like 5 hours, nothing. So where was going to be the first entry? Our first entry. Okay, let me draw the trend line better. And then I show you that this was actually a clean breakout test. Okay, our first entry was at the break. Entry number 1, it went up, came back. Entry number 2, and we let it fly. Simple, right? And we flew. So now, when do we exit? When we start noticing the momentum die down. But what do we do while we're in the trade? Let's say we entered here, and our target was all the way up there. We're going to targeting down here. Stop loss around here. Because why? We're letting it breathe. We're not billionaires. Cool. So entry, and then as it's going up, let's say it's playing out, it's going up. What are you gonna do with the stop loss? You're gonna move it. Now stop loss is at break even. Now stop loss is in profits. Now stop loss is deep in profits. We're up here now. We still want to come all the way up here. What do? We move the stop loss. And then it comes back, takes us out. What happened? We won the fucking trade in profits. Did we reach our target? No. But what did we do? We won the trade. Simple, guys. This is very simple. one point of high volatility or high momentum to a point of a correction or a point of consolidation. 3, let it fly. Let's look for it down, something that's coming down. Similar setup but coming down. Similar setup but coming down. Number 1, points of high momentum. So if you see over here, we already broken somewhat of a consolidation. We already had a consolidation from 1, 2. We wanted to take it up, but it broke to the downside. But regardless, we can still take a 3. And then you will notice it started consolidating again. That's 2. So 1, 2, and then once we break out, boom, first entry, we let it fly. And what did it do? It gave us 2 entries. It gave us 2 points to enter, and then we let it fly. This trade was just beautiful. Why? Because 1, 2, 3. 1, 2. Very simple, literally that simple. You don't need to complicate simple things. You don't need to have a triangle, then a circle, then a square, then an oval, then a line that comes from here to here, then a box from flipping heaven, and then all you need to have is impulse consolidation, impulse, point of high volatility, correction, let it fly. Point of high volatility, correction, let it fly. Simple. Every trade you take, you risk $1. Why? If you lose that trade, what do you lose? You lose 18 rand. Or if you want to trade higher risk, you risk $5, $10, because you know you have more money. If you have $100, you don't trade the whole $100. You're gonna risk $1 because you have 100 trades. If you have $50, you're gonna trade $1. Why? Because you have 50 trades. You're not losing 50 out of 50 trades. If you lose all 50 trades, my boy, Forex is not for everyone. But anyways, apologies that I'm whispering. Thanks you for watching this video. Make sure to comment, like, share and subscribe, and let's go to the next one. Yeah.